Good afternoon, Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about services and free products, just visit CFDs.com. Okay folks, an impressive rally today, very impressive rally. We've had the FTSE 100 off the lows quite substantially. Now I did forecast this to occur. If you look at my previous video that was published on Friday on the CFDS Education YouTube channel, you'll see that I actually call for this rally also with regards to European markets too. Now obviously I've done pretty well on the swing trading or the fundamental analysis service today, almost 160 points on the longs, and obviously on the day trading as well with 110 points there. Now at present, as you can see, we've broken out this this bearish channel. Okay, the projected target I did explain at the time was a inverted head and shoulders formation, although it's not exactly pretty, but the pattern certainly exists. Okay, so for those that are observing, it's all about lower lows and lower highs. So if you're looking at a left shoulder here, you're looking at the neckline here. Draw this in correctly. So you're looking at a projected target. Obviously you've got the right shoulder here, although obviously not as strong or not as effective. The whole concept remains the same, that it's a higher low. So the pivot low 6625, 6735, and basically more or less hit the target. Now the actual pattern now itself, given the fact that the inverted head and shoulders was a 100-point move, and we've seen that with the 6825 high from 6625 to 6725. You're looking at a inverted head and shoulders target of 6825, and obviously that has been hit. Now in terms of resistance zones, we always rely on previous resistance equals support. Now you have horizontal resistance in this zone, so this is a zone where the market certainly found resistance, and then obviously you've got the 200 MA above. Okay, now let's look at the weekly chart first of all, because it's the weekly chart that will obviously come into the foray. Now with regards to fundamentals, I think you already know the fundamentals with regards to the rally today. It's all been about Greece, nothing else. Okay, so it's about the Greek resolution or potential hope of a resolution, etc. Even though the hope certainly has been squandered to a large extent, or has been diluted to a large extent with the latest news flow with regard to the Eurozone. Those that want to observe, you can go to Live Squawk or Forex Live or Rand Squawk, and you'll see that the actual deal has not been struck, and it's all about hope. Okay, so it's a potential short squeeze going into a potential deal that's causing this rally. Now the Asian markets overnight, the Nikkei was up, Topex was up. The Shanghai, the Chinese markets, I think they've got a dragon holiday, I think, to do some dragon. I think it's some sort of event, Dragon Boat Festival. That's correct. Okay, so they're obviously on holiday. The Hang Seng was up, so therefore bullish bias going into the actual market, into the actual European markets themselves. Obviously the Athens, if I bring up the actual Athens market or the Athens Stock Exchange or the Greek Stock Exchange, you'll see that that was up quite substantially too as well. So given the fact that it's all about the hopium of a potential deal being struck, that's what the this whole market is currently hinging on or relying on. Okay, so that certainly seems the scenario, as you can see here, up by 9% today. Pretty impressive. Now the FTSE 100, looking at whilst we're talking about fundamentals, and I'll discuss fundamentals shortly. The FTSE 100 up quite substantially as well, up almost 1.7%, 115 points to a pivot high of 6825. And as you can see here, you've got Carnival, Taylor Wimpey, Sky up quite substantially. I think we also had Thornton's up today as well, with regards to some sort of takeover, I think, bid. So basically that's where we stand. It's all about this whole green candle here, which is the early candle of this week, which is green. It is basically the potential hopium or a Greek deal, and that's the reason why the markets are actually up today. Okay, now the weekly chart, as you can see there, HNS formation or potential for an HNS. So if I just go back to that weekly again, I'll give you this insight for the forthcoming videos. Just always remember, or make sure you remember that the market itself, or the FTSE itself, had this bull flag, had a failed bull flag. Then obviously market sold off due to the emotive pattern, and now my eyes will be on this potential right shoulder forming around the 50 to 61%, and then obviously the H&S formation down. Now I'm going to draw this pattern and keep it in here because we've just had some talk about a potential rate rise in the UK. Now Mr. Cunliffe, BOE's Cunliffe, positive signs emerging in financial sector recovery, lending to NFCs, etc., etc. Sees productivity picking up in 2016 as spare capacity erodes. Inflation move back to 2% as supply tightens, business investment consumption grows. Sees growth averaging 2.5%, blah 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 blah. Pickup in wages is key to MPC forecast. So basically what he's trying to tell us is that they are or indicate to us that they have a hawkish stance. If they have a hawkish stance, then not only are you going to raise rates in the US, you are also going to expect rate rises in the UK. If you're expecting rate rises in the UK, then you can certainly see a depressed housing market, and obviously potential curbs to lending, etc. So which actually stuns growth in the long term. Okay, not only does it stun growth, it actually stuns the lending side of the equation, which obviously is going to hurt UK investment. So hence the reason why you have this H&S formation depicting that. Okay, that's the reason why you have a H&S formation depicting that. So that certainly is another obviously outlook. Obviously it's long term in nature, but certainly something to keep an eye out for going forward. That's all I'm going to say. So I'm certainly going to leave that pattern open, or that pattern certainly available on the weekly chart. Now obviously the pattern can be derailed very very quickly by obviously QE, whether it be in Eurozone or whether it be from any other international bank, etc. So certainly is that side of the equation. Now you can also argue that this bull flag was negated due to Greece. So it was only due to Greece that it was negated, and now the fact that Greece is obviously on the potential as a possibility of a deal being struck, and therefore it will actually continue to move higher if Greece is in the background. So again, that certainly remains debatable. Now the daily chart of the FTSE 100. Okay, we've broken out of this bearish channel. Okay, I did explain to you on Friday. You have bottoming tails here. You have a doji here, and you are looking for a potential falling contracting wedge pattern. And we all know what a falling contracting wedge pattern obviously concludes. It concludes a potential breakout north. Now we've had the breakout north up to this 6810 previous resistance or previous support equals resistance that wasn't respected, so therefore I discard that. Okay, and the next potential resistance levels will be 6850 and then 6870. Now given Mr. Cunliffe's talk or speech with regards to his hawkish stance, also given the fact that the actual Eurozone deal is being downgraded or diluted to a large extent, some of the comments from Miss Merkel, I mean at present I can just read some of them for you, and it certainly sounds like tonight's meeting won't produce, this from Mr. French President Hollande. Tonight's meeting won't produce decision but will open way for resolution. How many times have we heard that? Okay. Not only that, obviously the actual bill itself has to pass through the Greek Parliament and obviously the German Parliament as well. So again, yes, we have signs of a potential deal. Yes, the catalyst is there for a short squeeze, but can this rally continue? Again, look for the rally to be capped at 6870, 6825. I've certainly exited my longs because there's too much uncertainty going forward with regards to any potential deal actually being struck. So again, given the fact that you're hostage to news flow, so I mean at this current juncture here we could get some negative news and the whole market could start to go into reverse. Also given the fact that we still have lower lows and lower highs, so one should certainly not get excited with regards to a reversal obviously occurring and everything in full swing. Having said that, the fib retracement has exceeded 75%. I did exit around the 75%. I exited where previous support equals resistance. This is exactly where I exited. So I actually got 85 of my longs. But having said that, I'm going to sit on the sidelines for now and see exactly how Asia reacts, because the Shanghai was down 6.5% and that's not a good sign. Okay, that's all I'm going to say for now. So it certainly has exceeded 75%, certainly has the potential to get to 686, 6870, 6850. But for now, given the fact that the actual news flow certainly is fluid and the market certainly remains vulnerable. Okay, and that certainly remains the situation with regards to the FTSE 100 on the daily chart. The 60-minute chart, we'll zoom in now. Okay, so 60-minute chart, we are into horizontal resistance at 6825. Then you have horizontal resistance at 6870, which is a 200 MA. You also have previous resistance equals support here at 6830, 6840. using your Fibonacci retracement tool. If you take your fib, take it to the pivot low, and like I said, you have exceeded the 75% fib. So again, has to be respected to a large extent, and certainly the bull side of the equation certainly is strong. But given the fact that we've obviously reversed inverted head and shoulders potentially, although it certainly is a circumspect inverted head and shoulders, the target more or less has been reached, and you are into this resistance zone around the 6825 and the 6835 region. So certainly observe that. Although, like I said, you have broken out of this bearish channel. Okay, that's basically something that we're going to keep an eye out for now. Okay, with regards to the 60-minute chart. Now the 10-minute chart itself, yes, we have pushed higher. Now at present, unfortunately, we don't have the actual gaps are readily available with regards to the FTSE. Now that is something that I am going to highlight here. So there is a glitch, or I wouldn't say a glitch, but because of the auctioning process, they don't always post, well, the gaps are not always visible as they are on the European indices. I have highlighted this to them, but they state it's due to the auctioning process. So that's certainly something that we need to take into consideration. Now, see if I have any diagonal trend lines. Nothing here at present. Okay, for now. So all I'm going to do is take this pivot high for now. I'm just connected to that pivot high, taking the pivot low here. Okay, nothing really in terms of the FTSE itself. Okay, so you have a rising contracting wedge pattern, but even that is certainly circumspect. So nothing as such in terms of the charts or any previous, because we're in no man land really to a large extent, given the fact that the price action hasn't been very active recently in this region. Okay, so horizontal resistance here, key turning points or key pivot points, and I think that's it really in terms of the FTSE 100. So again, it sort of coincides with a 6830 region. Now the FTSE itself, bring up my chart now. I've got my gap here. So the gap that I've got here on the FTSE 100 is at the 6710 region. Okay, which obviously is this close here. So if I just draw in my gap, although that is horizontal support, so your gap at the moment, given the fact that we've had this thrust higher, it's this candle that I have a problem with. You see, is this candle here 6780? I don't know why the first candle, I mean, to a large extent, certainly needs to be negated and adjusted, but that's just the way in which they operate. So you have this chart here 6710. So the gap itself remains open, so therefore that should act as a magnet for price action for the market to reverse and potentially close. So I'm certainly going to remain open to that gap potentially closing, and obviously disappointment etc. from Greece if no deal is reached. Okay, so again, remain open-minded, especially with regards to Mr. Cunliffe's comments now with regards to its hawkish stance. That certainly needs to be respected as well from my perspective. Okay, right. That's the scenario and situation that we find ourselves in at this current juncture. Okay, now with regards to the actual volatility index, I just need to highlight the volatility index is now into support for the FTSE 100. So again, this is an area where the FTSE, once it finds support, given the fact that it's a pivot S3 region, the FTSE will certainly come into resistance. Okay, so the volatility index is into support, therefore that means that the FTSE itself is into resistance. Now the weekly chart of the FTSE 250 supports the thesis on the FTSE 100 weekly chart, given the fact that we've broken out the key bullish channel, and the bias certainly remains on the downside from a long-term perspective. The daily chart itself, I have highlighted the fact that we did have this H&S formation. So if I take the pivot low from here, take it to here, and as you can see, that has been negated now to a large extent, if not retesting the neckline. Again, remain open to that as well. Okay, if I just draw my trend lines here, you can see here the market certainly is testing that resistance zone. Okay, the H&S, from a H&S perspective, I mean, you can have a H&S within a H&S. So you have a H&S here, this is your left shoulder, and we are potentially looking to put a right shoulder, and obviously the market moves lower. The whole concept here is the market hasn't made a higher high, so again I would certainly be worried given the fact that it's making lower highs. Okay, the FTSE all share has bounced off the 200 MA like I said before, but again you can see the same pattern emerging here as well. You've got the left shoulder being obviously put in here, you've got the head that obviously has put in a triple top and a topping tail. You bounced off the 200 MA, creating a right shoulder and obviously looking for a potential move lower. So the same pattern emerges from this is again long term, folks. For now, the market obviously is on this hopium, etc., etc. As you can see, that topping tail on the weekly chart for the FTSE, and you can clearly see the H&S formation brewing as well. Okay, so you have interest rate rises. I mean, looking at it from a long-term perspective, if you're a long-term trader, my bias certainly will be bearish on the FTSE 100 in terms of a long-term perspective, given the fact that Mr. Cunliffe certainly has obviously triggered off the potential rate hike talk. Okay, again, the market can change very quickly. Mr. Carney could come out tomorrow and obviously dampen that expectation very quickly and send sterling into a spiral. Okay, so again, that certainly one needs to remain open, and hence the reason why I prefer day trading. Okay, I like to be flexible. I mean, just think of the trading the Greek news over the last 2 weeks. How on earth you could have formulated an opinion on which direction the market was going is totally, utterly beyond me. Okay, I could not, for the life of me, understood or worked it out. That's the market, folks. Okay, that's the market. Right. So as you can see here, key here on the weekly chart for FTSE All Share again is potential H&S formation. Okay, folks, I think that's a wrap with regards to FTSE. Again, the market will be dictated and held hostage to the Greek news, as this meeting obviously is underway or has completed more or less. But the news flow from both sides certainly will continue, although the situation certainly seems to have calmed, and the actual bears certainly have gone into hiding for now, and we shall see as to what happens when the Greeks actually, given the fact that they are protesting as we speak in Athens. If you look at the news, they are obviously protesting as we speak because they want to remain in the Eurozone. But it depends on Germany, and given the fact that the newspaper Bild did report the fact that the Germans are fed up because this is not the first time. Obviously, Greece has defaulted, and I think the German electorate certainly are fed up with regards to Greece and its antics. Okay, so again, we could get one hawkish or bearish comment with regards to the ECB or even Miss Merkel or even Mr. Wiedemann, and the market could certainly collapse very quickly. So on your stops, obviously make sure you maintain your good risk management, and keep trading, folks. Goodbye.